Call this meeting to order. Welcome. It is about 3 o'clock on Monday, March the 19th. Jim Schulman, I am the Vice Chair of the Council Budget Committee. Our Chair lady, Tanaka Vircher, is running late. Hopefully she'll be here at some point and she can relieve me, but she asked me to go ahead and get started. This is a special called Budget and Finance Committee meeting to talk basically to get kind of an update on where we are financially, budget-wise, so forth. I know that the mayor has started budget hearings today. Our Director of Finance, Talia Lomax-O'Neill, is downstairs at the budget hearings. And so we have two special guests from the Finance Department who are actually going to do the presentations today for us. Kim McDaniel is here and Jean Nolan. And they are going to lead the beginning parts of this conversation, and then we will open it up for questions from members of the Budget Committee and anybody else who is here. Any comments or questions before we get started? Seeing none, Kim, I think I'm going to turn it over to you.
Okay, thank you, Councilman. Talia, of course, is tied up in the mayor's budget hearing, so Jean and I are going to be a poor substitute. But we are here today to talk about just a few topics that were requested to be gone over. I'm going to talk a little bit about fund balance, and then Jean is going to talk about revenues. And then we'll touch on expenditures, hospital authority supplemental, and upcoming filings and reports that you will be seeing soon. So what is on the fund balance slide, and I believe you also have hard copies in front of you, are the fund balances as a percentage of the subsequent year budget as of June 30, 2017. So this is where that percentage closed at June 30. And I do want to remind you that after the hospital supplemental, the GSD general fund balance has gone down from 5% to 3.4%. This fund balance as a percentage of expenditures is a key financial measure, not only from the standpoint of having prudent reserves, but also because the rating agencies look at these percentages as they rate our bonds. And rating agencies really expect to see, for our rate of bonds, fund balances to be in the 5 to 10% range. They'd like it to be 10 or more. Just to give you a sense of perspective, the 5 previous years, the GSD general fund balance ranged between 8.2 and 9.7%. The other thing that's important about focusing on these percentages is that in 1989, the council passed a resolution requiring 5% fund balances for the 2 general funds in the school fund, and the Finance Department has a policy that follows that resolution. One of the things that S&P, one of the rating agencies, noted the last time we did bond ratings is that our fund balances supported a AA rating because it demonstrated that we had budget flexibility. Should there be unforeseen events. And also, just to for a little bit of perspective, we had our financial advisor do a calculation about what the impact would be if we had a ratings downgrade. And what he came up with was that for $100 million bonds issued over 20 years, the impact would be additional interest expense of $885,000. So these percentages have, real impact on the government's operations and our ability to borrow at favorable interest rates. And I think, just as a reminder, the finance director has, said in the budget communication that one of our things we're going to really focus on as we put the 18-19 budget together is building our fund balances back up. So with that, I will turn it over to Jean to talk about revenues.
Good afternoon. I'm going to start out, let me just tell you that going through sort of some context under which revenue estimates are prepared for the budgeting process. Some of this is general to every budget cycle. Some of it's specific to this budget cycle. First of all, let me start off by saying that the majority of a fiscal year revenue is collected from September to August due to the accrual method. When you look at it that way, when we actually file a budget, there are still 5 months in the fiscal year for revenues to come in. Real and personal property tax are not usually finalized until October of the new fiscal year. Public utility taxes are not finalized or not available until mid-January of the new fiscal year. So for most major revenue sources, collections through December represents 4 months of collection. All that is to say, in a typical how a fiscal year cycle runs, and the chart here or the table in this presentation is for December. It's not very much relevant if you look at that. And so what I'm going to talk about are what we are seeing and projecting based on January revenue collections, which represents the 5th month of the fiscal year. Before I get to that, we just closed the books on revenue collections for February, and that occurred Friday. So we're in the process now of moving to looking at updating revenue projections and analyzing what the issues are that we're dealing with in revenue projections through the 6th month of this fiscal year. And we will continue to analyze and monitor revenue every month from here until the time we file the budget, which will be in May 1st. The last month that we'll have available before filing the budget will be March collections. And those we won't receive until mid-April. So in essence, the revenue estimate that we're putting together now for fiscal year 18-19 will consist of 7 months of actual collections and 5 months of estimates. Again, that's similar to what happened in building this current year budget. In addition to all the timing issues faced with when revenues come in, there's also the additional issue this year of the reappraisal. And that adds another level of uncertainty to the projection process. Primarily, we're putting together what we think the certified rate and what collections will be, and really try to estimate what the impact of appeals or adjustments may be that won't happen until June and July. So in this fiscal year, that's the process we went through, and the number of appeals, the actual number of appeals that were held, and the amount of those appeals that were approved were greater than what we anticipated at the time that we were putting our estimate together. And the growth is anticipated to be less than what we budgeted. Based on our best estimate today, which is through January's month end, we anticipate that property taxes will be $20 to $25 million below our budget. We're still looking at other revenues Sales tax seems to be on budget. There are other revenues that are on budget. There are some that appear to be as if they will be over budget by the time we reach the end of the fiscal year. But there are also other revenues that could be less than what we budgeted. So from that standpoint, we are continuing to monitor the performance and review revenue collections, but it's on a time frame that lags significantly. And given what we see today, I don't anticipate that revenue generally will be strong enough to make up the deficit that we're showing in property tax. And with that, the next slide.
Anything about schools? The next slide that's up here, just quickly, is the school revenue slide. And, schools, the patterns are the same for schools. And then in addition, schools has announced that they will not be collecting as much as some of the state revenues as they had budgeted. And schools will need to address the impact of that. On the expenditure side, wanted to touch on the savings targets that we had sent out to departments, and make sure that everybody understands that departments as a whole, virtually all departments have savings every fiscal year. This year, we took a little bit more of an intentional look at what we might anticipate in savings for the departments, based on, like, if they had unfilled positions at the beginning of the year and the spending through the current year and that sort of thing, just so there was a more intentional conversation with departments about savings targets. They are not cuts. We're not talking about, cutting any current year budgets. It's just being mindful of savings opportunities where they would naturally occur, in an effort to, help offset the additional supplemental appropriation. We're also taking a closer look at hiring and promotion requests than we typically do, us and HR. So if it's a position that's not frontline public safety, we would ask, some more questions about how it impacts, how it impacts the citizens and that sort of thing, to see, if any of those things can be delayed. But we do expect savings in almost all general fund departments in the current year. I will mention that we are working with fire, police, and sheriff. Those departments anticipate needing a supplemental. Police would be offset by additional revenues in secondary employment, so those would not, that supplemental would not have an impact to fund balance. And as we're pulling the supplemental together for fire and sheriff, we'll, and there are a couple of administrative accounts as well, we'll recalculate what that impact is to fund balance, because it definitely will impact fund balance. We were asked also to give a brief update on the Hospital Authority supplemental. Right after Council passed the supplemental legislation, we got Meharry paid that $4.4 million that was specified in the legislation. We are currently working with Meharry to talk about some of the current amounts in the current year, in the 17-18 year fiscal year that's due to Meharry, and we'll work through those issues with them. I do want to mention that the Hospital Authority finance staff, we work really well together. They're forthcoming, they're responsive, and that is a good working relationship. We have weekly calls and, more often if necessary. The Hospital Authority has not started drawing yet on the supplemental funds, because the regular funding, they still have some availability in that, but anticipate starting to draw on the supplemental funds in April, which will trigger the additional reporting and the additional documentation required by the resolution. And based on the cash flows that we look at with them weekly, I believe they anticipate accessing all of the supplemental that you approved. I want to mention that there will be an amount in the 4% authorization or resolution that'll be coming to council soon for some hospital authority equipment needs, and that we will take a look at their larger capital needs in the next capital spending plan. And then just to mention a couple of things that you will be seeing soon, 4% resolution, another supplemental resolution, which we, touched on a minute ago. Of course, we'll file the budget by May 1 and file the full debt report by May 1 as required by ordinance. And we are currently anticipating filing a bond resolution to retire commercial paper sometime by this summer. And I think with that, did you have anything else? No, I think with that, we'll entertain any questions you have.
All right, thank you. Mr. John Cooper, Councilman Cooper.
Thank you, Mr. Chairman. Thank you, Kim and Jean. So, if I can be familiar, so grateful to your ongoing professionalism and grateful to have this presentation. It's exactly what the Budget and Finance Committee could be doing. If you didn't mind, I wrote out a couple of questions just to get more specific. I think it would be a help, and I may have others, but let me go down a list here. How much money would it take to get our fund balances up to this 10% that the rating agencies, you were saying, seem to like? What?
Well, first, I don't know that our fund balance has ever been 10%, because that would be quite quite an achievement. But I don't know off the top of my head because I would just have to calculate that. But we'll give you some idea.
Well, thank you for going to the calculator. If you didn't mind looking at it at what our sort of historic balance has been,
sure,
and what that number is, if we take one of our choices going forward, obviously would be how much do we need to set aside to get back to our
sure,
historic norm.
I will say, just for a little bit of perspective, at June 30, the fund balance was at 5%. And when the 17 million supplemental came along, that took it to 3.4%. So that's just a little bit of perspective.
Right.
Yeah.
Well, and we've been running at 5%. You were making these comments that other places may be a little bit higher than that. And us too? Have we run higher than 5% ourselves here at Metro? Okay.
Yes, in the last 5 years, just talking about the GSD, general fund balance, which is the biggest, that's where the biggest part of the budget is. Fund balance range, that percentage that was up there ranged between 8.2 and 9.7%.
Okay.
So for that entire 5-year period. Now, as we were coming out of the recession, in 08, 09, it was lower.
But that'd be a useful number. Obviously, it's not going to be accomplished probably in a year to go all the way there. But in boom times, you would think that you would run those reserves a little bit larger. You were saying a ratings downgrade, just to be precise about that, $885,000 per $100 million. So $1 billion would be over $8 million. Have we had our ratings presentation for the year?
No, that was just for perspective, and we have not had a downgrade.
Okay.
But that was just, for perspective in terms of, how important the fund balance percentages are.
Okay.
Yeah.
But we haven't had a soccer stadium bond presentation yet.
No.
Okay. I've noticed in the revenue numbers there's a little bit of variation. And if you, this is part of the genius of what you all do, that the USD and GSD fund and MMPS, the percentages of the actuals don't really track. Why is that? So, for example, the school system, local option sales tax is only up about 2% actual to actual, but then a much better number in GSD and USD. So
I think that, I'd have to dig into it to be sure, but I think that the allocation of sales tax between the general government and schools was different this year as compared to last year. And yeah, Jean's nodding. And these variances that you're looking at are fiscal 17 actual to fiscal 18 actual. So I think that would account for that variance.
Okay, so but somehow they're not collecting. I mean, again, it's weird that one fund using the same half of, whatever sliver of a penny that they're collecting going in that would be different.
Well, and I think it's because the general fund has a greater proportion of sales tax in the current year than compared to schools than in the previous year. Just the way the budget was put together.
Well, is there a, sorry,
In addition, the sales tax, all these comparisons are general fund.
Okay.
Schools gets a substantial amount of sales tax, the debt service fund
That's right.
also.
That's right.
from the debt service
That's right.
fund?
Yeah.
Okay, to the sales tax to the debt service fund?
Correct. Yep.
Well, and then I thought I heard you say this correctly. I want to repeat it to make sure this is right, that the property tax estimate is now feeling that will be 25 million under the previously forecast total.
Our budget total will be, it'll come in 20 to 25 million below the budget used in this year's budget.
For FY18?
Right.
Okay, and then the sales tax number you were thinking will come in on what's forecast?
At least, excuse me, at least at this point, sales tax looks like it is on target for what we estimated.
Okay. Now, your revenue estimate, the finance director, it's always worth for us to remember, is responsible for the revenue estimate, and then you'll be coming up with the FY19 estimate for the state of Metro number.
That's right.
Okay. And that's done from the finance department, based on your confidence in historical projections?
Yes.
Okay. Well, that's, again, that's as important to work as anything that's done in Metro, and I'm grateful for you doing this. One more question. I know there are other questions here, and people can come back to me. The savings from the departmental spendings, which have happened always, close financial management, how much is that so far through this snapshot?
It's a little bit hard to talk about it in the so far because we have, like for example, there's going to be, I think, another police class coming on, so there'll be, some bumps. For perspective, last year, I think it was in the neighborhood of $15 million in total when you look at the CAFR. But we don't anticipate it to be that high this year. We don't anticipate the savings to be that high this year.
Overall, from all the departments, so the
In the general fund.
savings would not be as great as the supplemental for General Hospital.
That is what I would expect at this point.
Okay.
Yes.
It would be material, but not as great. So you can't
Yes.
say, you all did a great job with getting some savings out of the government. Let's spend that to the hospital. Okay.
Yeah, in terms of the departmental budgets, that's a true statement.
And one final question. I know there are other people in the queue. I'm grateful. The commercial paper refinancing for the bonding, how much will that be? What is our bond issuance need this summer?
I don't think we've quite settled on that amount yet. If I had to guess, I might say somewhere in the neighborhood of 600 million, maybe more, depending on if we get extra proceeds.
And so that's 600 million in terms of the FY19 implications. You're going from really 75 basis points to probably a debt constant of something on the order of 5.5 or even 6% on the 30-year bond. So you're talking about paying 5 points on the $600 million, which could be $30 million of additional debt service needed for FY19, if I, just laying out that requirement for debt service.
I don't think that it would hit the fiscal 19 budget. I think it would hit a future budget, just in terms of the timing on the principal and interest payments. But
that you'd be given a little bit of forgiveness in the first year of issuance, and then that would click in on the probably the 30-year paper, presumably, on that.
Yeah,
Okay.
and that's all still being analyzed.
Okay.
Yeah.
Well, I appreciate that. And again, Mr. Chairman, I'm happy to back, but I appreciate the time.
Thank you, Councilman. Councilman Glover.
Thank you, Vice Chair. All right, so Gene, I'm actually going to ask a couple of questions because I asked Mike Curl to pull some stuff together for me to start looking at sales tax revenues. You're saying you feel like we're going to be flat, that we actually will hit and what I think I'm looking at is 136 million, give or take, that we are anticipating to receive in total tax, local option sales tax for the year, correct? All right, here's where I'm getting confused. The number you're showing us here versus the number I'm looking at on my screen right now, it says local option sales tax actuals, and EBS showed a total of 66, 267, 571. For the sake of those watching right now, can you explain EBS, number one? And then number two, let's talk about the 66 million number, and does that actually work through the month of February?
It definitely doesn't go through the month of February because we're still working on February.
Okay. And actually, I guess I should have read this. I apologize. February accounts were not yet closed, but the numbers should be close to final. Would you say they're probably close to final?
They're probably close to final, but that's some of what we've got to look at.
Okay. So if I take that, and once again, I'm a very simplistic mind, so I have to, just kind of take things, divide them, and kind of figure out where we are. If I do that, then what I calculate is we're going to be about $20+ million shy on sales tax revenue unless there's something that happens throughout the remainder of this year that just blows us through the roof. And the only thing I can think of is maybe in June with the CMA Festival. I mean, does that now account for a much higher percentage than the Christmas holiday season and some of the others? Because I know in the past, the Christmas holiday season counted as a pretty substantial number for us on kind of making up what I would call lost ground.
No, I would say it's not going to change that much. It, again, potentially could, so we'll watch it. But typically, the February collections is when you pick up the Christmas numbers. So that's why I don't know that I have seen the numbers you're looking at yet, working on this other stuff. But I can look at that and give you a pretty good idea. But everything that I see right now on sales tax would indicate that it'll be on target.
Yeah, I would have to agree with you if I'm looking on a December to December number. But if I'm forecasting farther than that, and I'm looking at February to February, given that perhaps we're close, okay? Maybe off a couple of bucks here. But if we are in fact close, then help me understand, if you wouldn't mind. I would take the 66 million, divide it by the number of months that we've already started collecting, even though it takes us a few months to catch up at the end. Let's assume let's don't assume, we did begin in July. So July through February would be 8 months. And if I take that and then I multiply it times 12 months, that's where I'm coming up with a shortfall. Let me underline that. A potential shortfall of in excess of $20 million on the sales tax side of things. And so I really would like, because we're looking at numbers here in this report that are obviously a few months behind of where we are right now.
Correct.
So if we could, I really think we need to check that, because here's what scares me. Last year, I specifically asked the question on we were going to utilize $70 to $74 million out of reserve funds to pay for things when our economy was unbelievably strong. And I questioned, and what I heard from the administration is that, well, it's in the budget, Councilman, yes, but we actually won't use it. Well, based on things I'm hearing right now, we not only are going to use it in order to pay for the bills, schools is going to fall $7.5 to $8 million shy, so they're going to absolutely use every bit of the reserve funds that was built into the budget on that. if in fact we're $25 million shy on property tax revenue collections, if in fact we're $20 million shy on, and I'll even give it the neutrality of there not being no shortfall on the sales tax. But if we have utilized $74 million, give or take, out of our reserve funds, and we're 25, that looks like $100 million to me that we got to try to figure out how to make that up, number one. And a number of things have already been promised going forward on what we would have to have, i.e. a pay raise, this or that. At this point, can you tell this council, if you would, and Chair, I'm not sure who, actually, Chair, I'll direct this to you, if I may, because I don't think it's fair to ask them this question. Can we be told what we can anticipate with regards to, are we going to try to honor all these things that we've told the employees, number one, in the city, that we hope to be able to give them? And if so, how hard are we willing to roll our sleeves up and start making some cuts in areas that may not be necessary, because these are pretty substantial numbers? So I don't know. I don't know where the answer comes from, Chair. I just know that if I'm even close to right, it sends some chills up my spine, because what scares me and what makes, actually, let me rephrase that. What infuriates me is the fact that when we had such wonderful economic times, we have squandered through our savings account the way we have. And so, Chair, however we find that answer out, I would be appreciative if we can get those numbers. I know that some stuff came out from finance this afternoon that I've not seen. I've seen some other things with regards to the fairgrounds, asking for an apology and whatever. I think we need to rein a lot of things in, because I think we have, sad to say, in the economy we're living in Nashville, I think we've got some very scary times as we head into this budget process. So, Chair, however you think is best or most appropriate to follow through with that, I would be grateful. Thank you.
And thank you, Councilman. Obviously, and our folks from finance can answer as well. The mayor started budget hearings today, this morning. So we're having our meeting at the same time the office downstairs is starting their budget hearings. Mayor Briley has taken on this role, obviously, and is starting to try to figure out what's in store and what's going to happen. I'm glad that our chair called this meeting, because we're starting at the exact same time, and we're hearing numbers. You know, we're seeing numbers, and obviously you've looked through them and you're estimating what may happen. We're not sure. We'll have another set of numbers for March before that budget comes to us. But I think what we're being told, and then I'll defer to our finance folks, is that this is a much more difficult budget. And I understand the concerns about, as we go through budgets, particularly in good times, you're always, well, what you're told is that you should be very careful during good times to put money away for those times that are not so good. The question is,
Why didn't we?
Well, yeah, what happened, and then what are we really expecting this time? And you ask about priorities. I think, obviously, the mayor has just started, so we're not exactly sure what those priorities are going to be, but I think all your questions are relevant. We're starting at the exact time as the mayor downstairs, and I think there's lots of information and answers we're going to need.
And I apologize, because there was one other question. I knew I'd remember this after I put the mic down. The 4% fund with regards to capital improvements that we utilize inside of the budget, we're not required by charter to spend every bit of that, are we?
No, I wouldn't say there's a requirement to spend every bit of it.
So if we're in fact trying to figure out ways to start cutting costs right now, Vice Chair, I'm going to ask you to, or Mr. Jameson, however we do this, to ask, can we freeze that? I don't think we need to be spending any money right now that's not absolutely necessary. Because if what I'm reading is correct, we will have our hands full as we go forward. as will Mayor Briley. So if we could find that out, again, I appreciate it. And thank you for indulging me, Chair.
I do want to point out, though, that there is a charter requirement to put those percentages of the revenues that are defined into the 4% fund so that we're not able to use them for operating, if that makes sense. Okay.
Any other response to Councilman Glover's questions? At this point, I know obviously it's we're extremely early, but the concerns are real. And so the question is, how do we, as we start this process and move forward towards the time that we get the budget, how do we kind of see the bigger, as we get better numbers, how do we see that bigger picture?
No, I agree with what you just said and what Councilman Glover said, that we do have some big issues to look at. The use of fund balance and whether there's going to be fund balance there to use in the future. I would like to look at the $66 million that you were talking about on sales tax. Let me see how that fits into what I'm doing, and I can get back and reconcile. Right now, my concern is not sales tax. Now, it may be in later months, but there are other revenues that could potentially be problems also.
The only other thing, and this is just a pure comment now, not a question. Let's stop blaming Metro General for the shortfalls we have. I think we can all take some blame on a number of issues throughout our budget process here, but it doesn't boil down to one department in this city. Not if, in fact, what we're hearing right now is, in fact, what we're living. So I really hope we stop that nonsense. Thank you.
Thank you, Councilman. Council Lady Allen.
Thank you, Mr. Chair. Just a couple of questions about how we do projections and if there's anything we can learn going forward. You mentioned that the tax appeals were higher than expected. How did that ratio of appeals compare with what we saw in 2013?
It was higher. I mean, part of the problem that you see this year was a historically high growth in projected appraised values, followed by a historically high appeals numbers that went up there and the amounts. So they are higher, both in number and amount. And it happens because when we go through and do our projection, we build in an allowance for appeals, adjustments, so forth. In a reappraisal year, that number is substantially higher than in a normal year. And again, because this year was so much higher and then the appeals were, it outpaced what we were including as an allowance.
So you built in the allowance from 2013, for example, and it was
typically, yes. I mean, it was essentially the same percentage allowance, and so therefore, on that much higher assessed value, it was a higher number than the last reappraisal.
Right.
But percentage-wise, it was still using the same.
Okay, I understand that. I can see how that would happen. And then secondly, in terms of, I mean, last year what we saw was, you know, a lot of the cranes in the air completed their job and new buildings came online. Is that pace slowing down? Do y'all work with planning to determine which new apartment buildings and office buildings are opening up, or how does that part get figured in?
We do work looking at permits and values. I still see a lot of activity. We're still in the phase of, now that we have the estimates this far, what is it we're going to project for growth? I still think there'll be growth in property tax receivables. The problem is, because we were this far behind this year, if you compare budget to budget, it's not going to look like much growth. But we may still be in putting the budget together using a 3% property tax growth that's just going to get eat up by making up some of what we lost.
Gotcha. Okay, thank you very much. I appreciate that.
Thank you, Council Lady. Council Lady Johnson.
Thank you, Chair. I appreciate allowing me to ask question, even though I'm not on the Budget Committee.
We're always happy to have you.
Thank you. I was just looking at the number and try to understand annual budget and year-to-date actual, and kind of, breaking up. And did you say the actual budget is up to January?
What we're looking at on the slide comes from the quarterly financial report that is provided. So that is through December.
Oh, through December?
Yes.
Okay. So even through December, so we are, actual year-to-date to reach to a budget amount is less than 50%. So January, February, in this time, are we anticipating collect more revenue in that month?
I think this gets back to what Jean was saying earlier about the timing of the collections of revenue. Because the revenues for a fiscal year are collected September really through August, and you accrue back July and August to the fiscal year, what you're seeing here in the actual numbers for most of the large revenues is just 4 months of collections. Is that getting at your question?
Yes,
Okay.
just, simply looking at the number and just kind of divide per month.
Right.
It seems like we will never be able to catch up unless we have huge collection in next quarter. So that was my concern.
Well, let me say, first of all, there's two things. There's just how the accrual process pushes the number of months that you're dealing with. But there's also property tax comes in at different amounts. The first big payment date is December. You get a big jump in December. The next one is February. Well, February is the month we just closed, so that's what we'll be looking at. And that will be a substantial increase. There's still a sizable carryover into March, and then there'll be another carryover in June.
Property tax sale.
When we do the property tax sale for receivables. So it doesn't come in equally month to month, so you've got to factor that in too. But having said that, in our estimates, that's what we have tried to factor in, and based on that, we still see that we'll be 20 to 25 million short.
Okay, that clarifies. Thank you.
Kim, I think you wanted to clarify something.
Yes,
Go
I
ahead.
just wanted to get back to Councilman Cooper's question about the potential size of the bond authorization taking out commercial paper. I forgot I had the quarterly report in front of me. At the end of December, we had $450 million of commercial paper outstanding. And that quarter, we used $100 million. So, roughly if we use another $100 million, because the spending is pretty consistent, that would be, 550. So my 600 guess may not have been far off, but I did want to clarify that it was 450 and then about $100 million a quarter. Yeah.
Councilman Cooper, did you have other questions you wanted to ask? You're on.
Well, thank you. Grateful for that. Again, with the experts here. What does 1 cent in sales tax collect for the city of Nashville?
I don't know that off the top of my head.
I don't know that off the top of my head. We can get that, but.
Okay, because again, it's a little bit, sales tax goes to different different places, so just
It
what?
would be 1 cent would equal this amount,
Right.
then we would distribute
Right.
that amount to those funds.
And then not to ask Wizard about his magic, when you forecast sales tax collection going forward, what are some of the things that you are looking at to allow you to make a sales tax collection? Because, from many years it went flat to down and then up kind of remarkably, but the long-term curve is very consistent, it looks like to me, at about 2%.
Yeah, and essentially what we try to do is follow that long-term curve. As you said, though, it does gradually go up, so we try to follow that. The problem is when you miss the downturn point. And in actuality, I think that downturn point was in 17, where sales tax did come in less. But what we see this fiscal year, it looks like sales tax is back on track.
Okay, it's back on track. And then you will formulate that number for the finance director's revenue estimate for next year using some of leading indicators.
Right.
Okay.
And trying to estimate what we will end up at the end of this year, which means projecting out to August.
Okay.
And then next month, trying to say what we think the growth will be next year on top of that.
But over the last 15 years, it's averaged right at 2% over the long haul, hasn't it?
Well, property taxes,
The sales tax.
I mean, sales tax has done better than
Some
that.
years, yeah.
Okay.
For example, in 17, when I said it took a decrease, we were talking about 4 to 5%. It was between 4 point something. Whereas this year, it looks like it could be coming in at 6%. And the year before that, it was 7%.
Right, though, again, and also part of it is, are you compounding that, or is it year over year over
Correct.
that period of time? Thank you very much. Appreciate it.
Councilman Cooper, I was going to ask you whether you're suggesting that Mr. Nolan has a magic hat down in his office that he uses to project revenues for
I
the
am
next
hoping
year.
he has a hat and a crystal ball.
All right, good. Thank you. Councilman Glover.
Thank you, Chair. All right, given what the information we've heard, I'm going to direct this question actually to Mr. Jameson, if I may. Tomorrow I've got some ideas, but right now I think what is most concerning to me is how do we stop the bleeding we have? And I'll go back to 2007, 8, 9, when I chaired Budget and Finance on the school board. Obviously, we took a downturn in the economics of the sales tax revenue, and we had to do some pretty hard cuts inside of the current year. I know the administration has asked for a freeze to occur. What options does this council have available to us to say stop spending money right now on anything unless we've given full authority in order for you to spend money? Don't assume anything. What do we do to say stop spending now so we can try to figure out how do we build our reserve funds back up? How do we actually be who we should be being? And that's the fiduciary of the taxpayers' money. What do we do? And if you don't know the answer right now, it's okay, Mr. Jameson. But I think we need to seriously be looking in that arena because it's pretty clear to me we've got some issues we need to deal with. Thank you, Chair.
I'm on or not?
You're on.
You were mentioning the 4% funds, for example, and if a freeze could be implemented, the finance director does have that authority, but also keep in mind that the 4% fund, and just to back up for those who aren't as well versed, that is a percentage of the general fund tax revenues that are set aside in account, separate and apart from operating, so they can cover expenses of equipment and building repairs. There's no obligation that it be spent down to zero. The 4% fund is maintained on an annual basis, actually a quarterly basis, and the finance director could implement a freeze, but also keep in mind the only provisions in the code that are restrictive upon you is that when a request is made, it has to have certain amounts of information in an information sheet. But each one comes before you in the form of a resolution to which you can vote no, and that this body can vote no on a recurring basis for the remainder of time as necessary. Having come from the mayor's budget hearings this afternoon, he is making clear the condition of the status of the budget that we're in, and at best it's going to be a status quo budget for every department. Do not anticipate any improvements, any enhancements in your office, and we have all the staff in the council office is aware of that and the repercussions that it have and for the payroll and so forth, and I think I'm not speaking out of class looking at Kim and Jean to note that every department knows that in Metro.
Okay, and I realize tomorrow we're going to talk about Rule 36. I know that's one thing we can do, but I guess specifically I'm looking, if we have already approved expenditures, if the projects in fact have not been done or have not begun, if the contracts have not been finalized, I guess that's the other piece that I'm trying to understand on if there is a way that we can start trying to be proactive in cutting our cost, saving money, and trying to realize what the priorities will be for the city. Thank you, Chair.
Thank you, Councilman Glover. Anybody else have any questions? All right, just Councilman Swope.
Thank you, Mr. Chair. And thank you, Mr. Nolan, and thank you, Ms. McDaniel, for being here today. I'm not a financial guy at all, so this might seem like the most naive question in the room, and I apologize if it is. But I'm sitting here listening, and I'm thinking to myself, wait a minute, we're $25 million shy, going into a budget where we're freezing everything. So what happens on May 1 if a referendum does pass in this city, and come July 1, we go out and issue $1 billion worth of bonds? What does that do to our credit rating as a city?
If the referendum passes, it comes with surplus taxes that would fund any future bond issuances, specifically for transit. So, there'd be revenue to fund the transit program. And that would not impact the city's bond rating. The city would not be backing those bonds. It would be revenue from these additional taxes.
But am I correct in assuming here, and it is an assumption on my part, that if we've underestimated sales tax, which also would mean we've underestimated hotel taxes in the future and rent-a-car taxes in the future and business taxes in the future, wouldn't that leave us behind the 8 ball funding a transit plan from the onset?
I think right now the sales taxes are looking like they're coming in at about budget. And the hotel motel taxes as well. All of those are earmarked for things other than general operations, but I don't think we're anticipating any shortfalls in sales taxes or hotel motel at this point.
No, and the other way I would look at it is because the sales taxes seem to be on track, it won't impact. And we were also conservative. The surcharges, I think, for transit are on business tax, the hotel motel tax. The hotel motel tax is strong. And
Sales tax.
And sales tax, and that's good. So there are different set that all seem to be performing, and we were fairly conservative. Remember, the big issue on this year's property tax is 2 major things that these other tax sources don't deal with, and that is the appeals being higher, both in number and amount granted, and the overestimation of growth on property tax. That's not going to impact the transit plan itself because it comes with its own set of revenues dedicated for that purpose.
However, correct me if I'm wrong, and again, I'm not a financial guy. I'm not Councilman Cooper or Councilman Glover back here. But if we've maxed out of 6 taxes that we can actually enact, if we're maxing out 4 of them for transit, that pretty much leaves us that if we have a shortfall in the operating budget moving forward, we have to raise property taxes. Am I correct?
Well, I don't think any of the surcharges are capped for general government based on transit. It's on top of.
But I would think, I would think, and excuse me for interrupting you, but I would think that as having the highest taxes on those 4 specific taxes in the country, I'd pretty much call that maxing it out, wouldn't you?
I'm using the very technical term of how much more can we raise it, not how much we should or what it would do.
Okay, thank you. Thank you, Chair.
Thank you, Councilman. Councilman Cooper.
Very quickly, back with the wizard in his hat and his crystal ball. And thank you for taking advantage of expertise. On the hotel tax, so much of that is based on a forecast on the room rate, of which Nashville famously has had very high room rates. Will you have a forecast for the future hotel? I mean, you have to have a hotel room rate forecast for next year, in effect, to forecast that revenue. What do you remember what room rate you're forecasting? Are you forecasting it continue to go up? Because X% on a $500 number is very materially different than on a $250 number.
I don't have one I use, but we rely on the Convention and Visitors Bureau. We've also got a gentleman in the budget office now that's using statistical analysis along with, I would say, my more historical linear perspective. And the two is what we will hope will give us a pretty solid estimate.
But like reappraisal challenges, a supply of room rates, of extra rooms, and a decline in room rates might be what we're talking about here next year in missing that hotel tax number, conceivably.
If we miss it, but we're hoping that we will do enough analysis that we will be on
Thank you.
target.
But in your formal revenue forecast, the number that you're using is from the Convention and Visitors Bureau forecast.
We tend to rely on that.
On that, for that. Okay, appreciate it, the expertise.
Thank you, Councilman. We have about 4 minutes left, and I have got Councilman Davis.
Thank you, everyone. I'm going to be brief. So just for the record, we're about $25 million shy of what we would like to have. Is that correct?
On property tax.
On property tax. Okay. And is there any, I know we're looking at a lot of different options here, hypothetically, because, we're all just trying to find out the best way to do that. Like, for example, Councilman Cooper, or I'm sorry, Attorney Cooper, if you could chime in to make sure that we can do, and Mr. Jameson, if you could help also. If we ever, I know maybe some old property tax buildings that maybe we collected from lack of property tax payments, maybe about 5 years ago or maybe 10. Could we potentially sell some of those on the open market to pay for that loss?
Yes. I mean, we do, and yes, we can. I guess from one standpoint, that's not as big of a number as it used to be because we sell our property tax receivable. So it gives people time to continue paying on their taxes. They just have to pay the interest and penalty.
Yeah.
But yes, we do sell back tax properties.
Yeah, or hypothetically, if somebody's long lost aunt left Metro a piece of land in way out somewhere that we've had it reserved for. There's nothing on it, no homes, no parks, or nothing, and it's just out there that we had. Could we look at? Could that be sold to pay down that kind of debt or to add back to the general fund?
Yes, it could be looked at.
Looked at, okay. And relatively, could we do that rather quickly if we said, hey, we don't necessarily need that, and this? Could we do a sale within 3 months or 4 months so we could help the budget by July?
I doubt it. My experience here recently, and I've spent some of it in the property public property section, land transactions take longer than I ever expect.
No problem. Thank you, Mr. Nolan.
Thank you, Councilman Davis. All right, so the last questions go to Councilman Glover.
Thank you, Chair. I wasn't going to ask another question, but after Councilman Swope brought up what he brought up, Mr. Jameson, it's my understanding that should the transportation referendum pass, it will issue revenue bonds. But it's also my understanding in reading the report that should we fall short in revenue collections of the 4 various areas we will be collecting upon, it will fall back on the city under our operational budget to make the difference up or to pay it from somewhere other than just the revenue bonds that are issued. So again, not asking you to give me an answer right now, but if we fall short on those revenue bonds, where will the money come from to make up the payment? And if you can give us that answer, I would be appreciative.
I think the answer is no, that's not the approach. And in fact, the statute includes a specific provision that if a portion of the program becomes unfeasible, either financially or practically, then you can take the revenue you have available for other portions of the plan and dedicate that, remove that portion of the plan. It can be amended going forward after adoption, after May 1st, and that is specifically stated within the state legislation.
So after we issue the bonds and are doing the work or however we do it, if we fall short on payments because we haven't collected enough, though there's not a recourse on those bonds for the issuers of those bonds to collect money from the city?
What the state legislation says is if there's a portion, let's say your plan has 10 different elements, and you become aware of the fact that you can now only afford 9, you can eliminate one of those portions of the plan and redirect the funding so that you're funding 9 instead of 10. That's a fairly simplistic approach, but that's what the statute specifically allows for changes after adoption.
Okay. All right. Thank you, Chair.
With the referendum.
Please say, let's make sure we understand that. With the referendum.
With the referendum, as of May 1st, yes.
Okay. All right. Thank you.
Right, but I think that depends on the degree of the change involved.
All right. That should take care of all of our questions. We appreciate everyone being here. Gene, Kim, thank you very much. I would ask that if council members do have questions, we tried to take them down, but if you've got questions now or if you've got other questions as we proceed, please get them to the finance department. We're just starting, but that budget will be here before you know it. So take all the time necessary to make sure your questions get answered. All right, thank you all. This is going to adjourn the special budget committee meeting, and then in just a few minutes we will start with our regular budget committee meeting. Thank you.
This has been a service of the Metro Nashville Network. If you would like to see this presentation again, or for more information about this and other programs, visit nashville.org.